It's 5 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know this Friday. 25 and more. Fed Governor Chris Waller endorses a quarter-point cut in September, maybe more in the months ahead. PCE takes center stage. Markets await the latest read on inflation for more clarity on the Fed's rate path. And a federal housing agency sends a new criminal referral against Lisa Cook as the Fed governor attempts a pushback. It was another record high yesterday for this equity market, the second in a row. Are we going to get another day of gains? So far in this future session, it is not looking so. By the way, we had those records and even had the NASDAQ leading yesterday, despite the fact that we had NVIDIA earnings that gave a disappointing forecast. NVIDIA didn't even end down 1%. It did end down for Dan and I saying that it would be in the green at the end of the day. Even so, maybe a little bit of stress seeping into the market this morning. A lot to consider. For one, there's the issue of Fed independence. There will be a 10 a.m. court hearing over Governor Lisa Cook. And then we also get PCE. So at the moment, we're looking at the NASDAQ leading losses after gaining yesterday. The S&P down by about 0.4, NASDAQ more than 0.5%. The Russell 2000 has been outperforming as of late, and that continues. Meanwhile, for this bond market, it was some serious flattening yesterday. Today, that is not happening. It is, again, the long end that is leading the losses, up by 3 basis points. Your 10-year yield up by 2 basis points, standing at 422.65. Governor Waller yesterday saying, yes, a 25 basis point cut. Maybe it will be more if the labor market data this month or this coming month looks worse than expected. Let's now look at some of the stocks moving underneath the surface. With that is Kriti Gupta. Good morning, Kriti.
Good morning, Danny. Let's kick it off with Dell this morning. This is the old guard of tech. The idea here that simply being has been one of the major winners when you talk about where you want to look at the next level when you're talking about your tech investments. If it's not NVIDIA, if it's not Apple, if it's not Microsoft, do you start to revisit the old tech guard, Dell or Oracle? This morning, the shares are down some whopping 6%. They had their earnings coming out yesterday. Kind of a double whammy here when it comes to the actual hit. The AI server backlogs really seemed to be a pain point when it came to these numbers. Their margin also not impressing Wall Street. That is going to be a key piece when it comes to those Dell earnings. We'll stick with the tech picture, though, except maybe in the opposite direction. Autodesk, of course, is your biggest, highest volume pre-market mover in the S&P 500. Those shares higher by almost 10%, Danny. A massive win. Citi calling it one of its best beat and guides in years. Massive move there for Autodesk, really impressing Wall Street, not just meeting them, but winning those expectations. Let's switch sectors, though. Caterpillar is going to be another stock to watch. This is, of course, the major bellwether, the major global bellwether. We really look to this one for its China exposure as well. Those shares down about 3% this morning. They are talking about a tariff impact of $1.8 billion. Really keep an eye on that. We're talking about so much cash in these balance sheets. Does tariff really pressure the margins? Caterpillar seems to say yes.
Kriti, thank you very much for that roundup, and we'll also catch up with you later in the hour. Let's go back to one of our top stories this morning, where a federal judge is expected to rule today on the president's decision in an emergency hearing, even as Cook seeks to block it with a lawsuit. Joining us now from Washington, D.C. is Bloomberg's Kasia Klimanshinska. Kasia, we get a hearing that kicks off at 10 a.m. What are we expecting? A very close-up Kasia there. I was going to say, I think we're adjusting Kasia's shot. But again, Kasia, we're going to get this hearing starting at 10 a.m. There you are, back in focus. What are we expecting?
Good morning. Thank you for having me on the show. Indeed, we'll find everything today. There will be a hearing at 10 a.m. That's after on Monday, President Trump has taken a step trying to get rid of Lisa Cook, firing her from the Federal Reserve Board, arguing that she claimed 2 real estates as her primary residences, and saying that the person who is responsible for setting interest rates, for setting the cost of mortgage rates, cannot make mistakes like this. Lisa Cook is fighting this. She filed a lawsuit yesterday saying that it's barely a clerical error.
So clearly a clerical error, but in the meantime, this is a Trump administration that is trying to move forward with getting more of Trump nominees onto the Fed board. Stephen Myron is among them. What is the plan there when it comes to Senate confirmation? How long or short does this process seem to be shaping out to be?
With President Trump not doing much today, all the eyes are on the Federal Reserve. The Federal Reserve is meeting on September 16th and 17th, And so now we have this candidate that President Trump picked, his close ally, Stephen Miran. He will have a hearing next week, and he is very likely to get confirmed and be in the seat before the Fed meets in the middle of the month to decide on interest rates. And so it is indeed quite likely that the Fed will in the end decide to cut interest rates in September for the first time this year.
Well, certainly. And you have a Waller yesterday, Kasia, who spoke about that, the desire to cut 25 basis points and maybe more if this is a data that comes in next month with inflation looking tame and at the same time unemployment looking concerning. Kasia, but when it comes to Lisa Cook, there's a real question as to whether she will be present herself at this year's Fed decisions. What is the possibility that you do get a stay, that you have a judge as this process plays out that allows her to continue to go to the Fed meetings, that allows her in the Eccles building? All right, I think we might have lost Kasia there. Kasia, thank you so much for joining us this morning. Again, that is Kasia Klemenschitska from D.C. But as I was saying, one of the questions is what happens as this plays out in the courts? We've seen things like tariffs, for example, with other court decisions around the president. This has been a court system that has allowed the president to continue tariffs. So will it be the same with Lisa Cook, that she can stay as it plays out through the legal system? Okay, let's get you some other top stories that are trending on the terminal this morning. And it is the end of duty-free imports into the U.S. costing $800 or less. It is the so-called de minimis tariff exemption that comes into effect today. The end of the provision is causing disruptions, with some postal agencies stopping U.S.-bound packages and businesses facing higher costs. The Russian and Ukrainian presidents aren't likely to meet. That's according to the German Chancellor Friedrich Merz. That's despite President Trump touting a possible Putin-Zelensky summit. The remarks come after Russia struck Kyiv with a wave of drones and missiles, defying U.S. and European calls to end the war. And Pop Mart's new mini Labubu's are riding the momentum of their bigger predecessors. The smaller furry toys sold out almost immediately in China and in major overseas markets after hitting stores yesterday. Pop Mart shares closed down Friday, with the market having already priced in the enthusiasm for the popular toy. I feel like this is Furbies 2.0, just as demonic, just as scary, just as popular. Okay, coming up, we're going to look into the macro picture and what else is happening around the world. You are watching Bloomberg Brief.
I would support a 25 basis point cut at the committee's meeting on September 16th and 17th. While there are signs of a weakening labor market, I worry that conditions could deteriorate further and quite rapidly. And I think it is important if the FOMC not wait until such a deterioration is underway and risk falling behind the curve.
Fed Governor Christopher Waller speaking at the Economic Club of Miami there. Waller also remarked on the potential impact of tariffs on inflation.
Oh, tariffs, prices will go up and it'll be more expensive. They got asked for a raise. Well, you don't do it on the sales tax. You don't do it if your income tax goes up or any other taxes go up. What is it special about tariffs that makes you want to act differently? So that's kind of where I'm at. I'm back on team transitory.
Oh boy, the T word, it's back. Christopher Waller back on team transitory. Let's unpack all of that with Aneeka Gupta, Director of Macroeconomic Research at WisdomTree. Aneeka, wonderful to see you. It's been way too long. So there you have Christopher Waller endorsing 25, also goes on to talk about maybe the size should be bigger if the economic data appears to deteriorate from what we get in September. When you look at stuff like that, Aneeka, do you assume that this is who's going to be heading the Fed come 2026? Is this a de facto dovish policy for 2026?
Well, very good morning, Danny. We've got a lot going on at the Fed, clearly with, the news around Lisa Cook. And then the data that we received yesterday with, the estimate for second quarter up 0.2%, revised higher. We've also seen real final sales to private domestic purchasers, which was primarily a sum of consumer spending alongside gross fixed investment. It's an indicator that Jerome Powell generally does serve as a good serve as a good indicator for underlying growth trends. That's also been revised higher by 0.7 percentage points. So I would say You know, Fed Governor Christopher Waller's comments are again pointing in the direction towards more dovish monetary policy. But having these figures in mind when he spoke last night, it clearly is opening the way, paving the way for not necessarily a 50 basis points interest rate cut for September, but definitely indicating that a 25 basis point cut is definitely on the way for September.
At the same time, Aneeka, I mean, again, to the point of the data yesterday, if you get a second quarter GDP that is raised from the first initial estimate, you get headline PCE revised down, weekly jobless claims that fall. Doesn't that point to a stronger economy that doesn't necessarily fit with the picture of more robust rate cuts to come?
That's a great point, Danny. It does. It does tell you that things are looking a lot better than expected, but it's important to keep in mind that we are seeing other signs of data cooling in the U.S. economy, especially with the labor market. We have had a much weaker payroll report last month, and I think what's important to see is how investors are now going to digest the impact of these higher tariffs. Are we going to see consumption start to cool? And that remains a very important factor for the U.S. economy that is so reliant on the U.S. consumer. So I think in anticipation of that, and given the fact that we believe they've been quite slow, a rate cut in September seems to be the right way forward.
Aneeka, we have seen, just looking at this curve, the front end really has been pricing that in. The long end may be pricing in concerns of independence deficits and moving higher. I want to focus, though, on the 10-year. Despite some of the better economic data, it's been a 10-year that has, one, been stuck in a range, but if anything, has been falling, currently trading around its lowest since the start of this month. And despite some of the 2-year forward inflation swaps moving higher, what do you make of where the 10-year currently sits?
No, that's right. It has been, trending in that range and actually moving lower. And I think what it is in a way pricing is the expectation that the market has of further rate cuts along the way. And I think that's what it is actually signifying. Now, whether we get all those rate cuts, given the recent strength in data that we've seen, is yet to unfold. Our view still remains that the U.S. consumer is likely to face much higher prices, much higher tariffs, and that could have a dampening effect and a cooling effect on the U.S. economy.
A dampening and a cooling effect, Aneeka, but in terms of the impact of inflation, are you like Chris Waller, back on team transitory?
It's really hard to say. We've seen these trade wars now pass on beyond just U.S. versus the rest of the world. We're now seeing other countries, such as Mexico, place tariffs on China. So that's just telling us that as other countries also start to pick up on these trade wars amongst themselves, that could have an impact of higher prices across the globe, which could not just be a one-off effect. And it's important to see whether that follows amongst many other countries. So I would say for now, it's a bit difficult to actually to get a clearer picture of whether this would be just a one-off. But I think prices are likely to go higher, and it's going to be interesting to see how U.S. consumers or the U.S. corporates actually absorb that.
Aneeka, I feel like it must be somewhat frustrating to try to do macro research right now and apply it to markets, because you can have a view like that, and markets really aren't trading on tariffs. Or, for example, you could have a view on Lisa Cook and the threats to that Fed governor and independence. And again, markets have not really traded it in. Yes, curve steepening, but at the same time, a dollar that's been little moved. Aneeka, why do these markets seem more and more immune to some of the political and policy headwinds that have been coming in a serious way?
It's hard to say, Danny. I think it's in a way it's going to be a long fight that could play out, and markets are just shrugging it off. I think what markets are trying to do is they're trying to just look at the implications of these sequence of events. And what it is trying to tell us is, you've now got 4 out of the 7 members on the FOMC on the Fed committee that are likely to be pointing in the dovish direction. And so what do we do? What do we infer from that? We do infer a more dovish path to monetary policy in the US, which could aid or somewhat offset that impact of slower growth and those higher tariff rates. And that's what markets are pricing. So that's how we're viewing it.
To that point, jobs September 5th, CPI September 11th. Aneeka, how high is the bar for those to act as a disruption to the current market pricing we have for cuts come September?
Yeah, I mean, on the one hand, if we do continue to see weakness on the US labor market, then that does open up and give plenty of ammunition for the Fed to lower rates. And so that's the path that the markets are pricing. However, on the flip side, if we do see a bigger jump in inflation, then that reinforces Fed Chair Powell's more cautious stance on maintaining maintaining a much more measured approach towards loosening of monetary policy. Instead, he might cut and then hold for some time just to observe the data, and then follow on with another rate cut.
Hey, Aneeka, we're going to have to leave it there, but it was so great to catch up with you this morning. We need to do this again soon. That is Aneeka Gupta of WisdomTree. Coming up on the show, Trump's Intel deal was designed to block the chipmaker's foundry spinoff. A look at that and what else is making headlines and your front page news. All of that coming up next. You're watching Bloomberg. You are watching Bloomberg Brief. I'm Danny Berger in New York. Let's get you now your front page news. A look at what's making headlines. First up on the Wall Street Journal, on their front page, reporting that President Trump is leaning on national security to justify the next wave of tariffs. Deals on steel, aluminum, and other industries expected to rise. This justification to provide a legal backstop for policy. Next up on the Washington Post, reporting that the White House has tapped as top deputy to Robert Kennedy Jr. as acting CDC director. That's according to two unnamed sources. The selection of Jim O'Neill, who is currently the department's deputy secretary, potentially clears the path for Kennedy to continue his overhaul of vaccine policy. And on the Financial Times, reporting that the Trump Intel deal was designed to block the sale of the company's chip-making unit. That's according to Intel's CFO. Intel has been under pressure from investors to spin off or sell its loss-making foundry business. For more, we are joined by Bloomberg Tech Europe host Tom McKenzie. Tom, there has been a lot of questions swirling around Intel. Exactly what the White House is hoping to achieve by taking a stake in Intel. What does this latest report from the FT do to color some of those questions?
Yeah, I mean, absolutely. To your point, Dana, we now have more details in terms of the Trump administration's thinking around this deal, at least according to the CFO of Intel, speaking at a Deutsche Bank event and reported by the Financial Times, saying that essentially what you were having was a CHIPS Act subsidy that gets converted into equity. We knew that part, of course, prior to these comments from the CFO, valued at around $8.9 billion US. That is the injection of liquidity from the Trump administration on the terms of these deals. What is new is that the CFO is saying that a key part of that is that this is a Trump administration that wants to make sure that Intel doesn't spin off the foundries part of the business. They come under pressure from some of their own investors, some on their own board, in fact, to consider spinning off the foundries business that was such a central part of wrapping up the losses that we saw last year, 2024, losses of about $13 billion US for Intel, as they spent heavily on the foundries part of a business to try and compete with the likes of TSMC and Samsung, ultimately with plans to build out what would have been one of the biggest foundries in the world in Ohio. The new CEO comes in, Lip Bhutan, and rethinks that whole strategy. And there have been all sorts of rumors about whether or not they would spin off the foundry part of the business. It goes back to your point and the previous story around national security. We know that national security is important to the Trump administration around these key industries. And it seems that when it comes to the foundries, they want Intel to continue that push into the foundry business. They have the liquidity now from the government, from SoftBank, but they still don't have any customers. And that's the next key component for Intel. They need to lock in the custom of the likes of Apple and NVIDIA to really make this work.
Hey, Tom, can I just ask you about NVIDIA yesterday? Because we had its earnings, sure, it was Wednesday, but I mean, the stock didn't even end down more than 1%. Tech stocks rallied yesterday. The NASDAQ outperformed. After NVIDIA reported it was down 3% in the post-market. Why this kind of change in heart around it?
Yeah, all the lead up, of course, to the earnings was a suggestion you could see moves of around 6% on either side, depending on how the earnings came through. And, you read the notes that come through from Wedbush's Dan Ives. He was on, of course, Bloomberg TV, and he said, look, it's going to turn into the green by the end of the day. And it wasn't far off, of course. But the question is, this is still phenomenal growth. This is Jensen Huang. He's no longer driving a McLaren F1. He's driving a Porsche. So he's still in a good position. The growth is still there. It's just you're getting growth of around 50 billion US dollars, or around 40% growth versus 400% growth, which was what was being notched up in some quarters of 2024. So it's just coming off a very, very high base. And it's still a company that has about 90% market share with AI accelerators. I think all of that is being digested by the markets. When on valuation, in terms of forward PE, it's not looking too stretched for many, around 34 times.
I love that. Not a McLaren F1, but a Porsche. The cost differential is probably immense, like many, many millions versus a Porsche. But anyway, Tom, thank you so much. Tom McKenzie there in London. Coming up, is transitory back? We're going to discuss Fed Governor Waller's remarks with MUFG George Goncalves coming up next. It's 5:30 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know. 25 and more. Fed Governor Chris Waller endorses a quarter-point cut in September and maybe more in the months ahead. PCE takes center stage. Markets await the latest read on inflation for more clarity on the Fed's rate path. And a federal housing agency sends a new criminal referral against Lisa Cook as the Fed governor attempts to push back. The second day yesterday of a record high. We ease off of that this morning. We're down by about 0.5% for the NASDAQ, 1/3% for the S&P. By the way, we got to that record high yesterday, even with what was supposed to be disappointing NVIDIA earnings. But the stock didn't even end down 1%. It ended down less than that. But heavy focus on the Fed's independence this morning with a court hearing for Lisa Cook at 10 a.m. We also had curve flattening for this bond market yesterday. That eases this morning. It is the long end that is leading the losses. We are up by nearly 3 basis points, 490 on the 30-year yield. Your 10-year yield, that stands at 422.45, higher by 2 basis points. Let's look at some of the stocks moving underneath the surface this morning. With your stocks to watch is Kriti Gupta. Morning, Kriti.
Good morning, Danny. Let's talk about Dell here, the old guard of tech, taking a little bit of a beating this morning, down by 5.8%. There are two reasons for this, a 1-2 punch, a double whammy for the stock. One is going to be this AI backlog or server backlog. That's going to be really crucial. They're also seeing some pressure on their margins. This is a theme that you're seeing in a lot of the corporate earnings. Those shares down by just shy of 6% in the pre-market. I'm going to stick with the tech theme, though, in the opposite direction. Autodesk, of course, is your biggest pre-market mover to the upside. Also a big earnings story, a massive beat and raise from Wall Street, getting a lot of praise to this stock. Citi calling it one of the best earnings reports in years. We got to go back down to the downside, though, Danny. Caterpillar, of course, the global bellwether, the construction equipment maker that has that China exposure, talking about a $1.8 billion tariff hit. Those shares down by about 3%. Looks like margin pressure eating into their bottom line as well, Danny.
Yeah, seeing that throughout industries exposed to tariffs. Kriti, thank you very much for your work this morning. Let's now get back to one of our top stories, though. Fed Governor and Fed Chair candidate Christopher Waller calling for a rate cut.
Based on what I know today, I would support a 25 basis point cut at the committee's meeting on September 16th and 17th. While there are signs of a weakening labor market, I worry that conditions could deteriorate further and quite rapidly. And I think it is important that the FOMC not wait until such a deterioration is underway and risk falling behind the curve in setting appropriate monetary policy.
Then Governor Waller went on to say this.
Oh, tariffs, prices will go up and it'll be more expensive. Like I asked for a raise. Well, you don't do it on the sales tax. You don't do it if your income tax goes up or any other taxes go up. What is it special about tariffs that makes you want to act differently? So that's kind of where I'm at. I'm back on team transitory.
For more, we are joined by Jamie Rush, Director of Global Economics for Bloomberg Economics. So, Jamie, Waller is back on team transitory.
Morning, Danny. Yeah, he is, isn't he? And he couldn't be clearer that he wants to see rates go down in September. And markets, of course, are seizing on these remarks as well as other recent comments. and they're feeling very confident. So we've got an 85% chance of a cut priced in for September. But I think what we do need to remember, though, is that even his comments, but also other policymakers' comments, are conditioned on the data. And there could yet be a turn in the road. So, I mean, today we're getting PCE data, and our US team sees a small climb on the Fed's preferred gauge of core inflation to 2.9 from 2.8. When we look at the detail behind that, what is it that's driving it? Well, actually, it's to do with markets. So markets have done well, portfolio management fees are going up, and that's going to push up on the inflation reading. And because it's services, that could be a bit sensitive for the Fed. So a little bit of a upward pressure on inflation there. Further ahead, though, the next critical data release is going to be the payrolls data, right? And so our very early view is that this is potentially going to come in reasonably strong. And so while the market is pricing in 85% chance of a cut, our US team, led by Anna Wong, thinks that it's more like maybe 50-60%. So much less conviction there, and she does have a tendency to be right. So there's still a lot to play for before that cut comes into view.
So that's the big data, but we also have a little taste today, perhaps. We have PCE, we have University of Michigan. Jamie, what's the expectation?
Yeah, I mean, so as I said, PCE, little modest increase in core inflation reflecting those fees. I mean, generally, if you look at the US economy, it's holding up okay, right? We haven't seen a sharp downturn in momentum or business confidence. Things are holding up okay. The job market is obviously, we've had the history redefined for us on how strong that was, but we're not seeing signs of a sudden sharp downturn. So general picture is steady as she goes, monitor the data closely. Cuts are probably coming, but maybe not as baked in as we should, as markets are currently expecting.
All right, Jamie, thank you very much for that. That is Jamie Rush of Bloomberg Economics. Now, here's what George Goncalves of MUFG says on the rate path ahead. He writes, if the labor data were to weaken further, the Fed can pull forward cuts that are priced in for 2026. So we keep the option of 2 cuts as our base case, but wouldn't be surprised to see another cut for a series of 25 basis point cuts at the remaining 3 meetings. And George joins us now. He's head of U.S. macro strategy at MUFG. George, great to see you this morning. I got to say that kind of reflects from what we heard from Chris Waller. So when you look at Governor Waller giving these speeches, does that really set the tone for where the FOMC is headed from here?
There's it's almost like a deja vu happening in 2025, like 2024. Last year, Waller kind of led the charge with the 50 bip cut, although he never really came out and said that, but he was one of the people that were kind of proponents towards that. Kind of calling for a cut in July, dissenting in July, ultimately being proven right that the data has been overstated, especially on the jobs market. It's not as robust and as resilient as Chair Powell's claimed. And then, of course, we had Chair Powell do a second pivot. Again, this deja vu of 2024 coming back for 2025 feels similar but slightly different. I'm more in line with Waller's view and have been for quite some time. We think that's easier to cut than to stay on hold now because the jobs data is clearly weakening. But we have that data that's coming out next week, and then the following week we have that big revisions we have to look at as well.
George, though, in the meantime, some of the data we've gotten has been robust. You just look at yesterday, we got that second quarter GDP where it was stronger than expected. Some of the headline PCE was also revised down. And then we got weekly jobless claims that also fell. What do you make of that, though, that some of the growth data has been holding up quite robustly? It doesn't appear to be an economy that's really caving in to whatever issues might be there with the labor market.
Well, look, I think we have to take the first half on average between Q1 and Q2. Just looking at one quarter at a time, considering the volatility that we got around the tariff announcements and now the eventual tariff implementation, I still think the jury is out in terms of the full impact of that on the economy. So a bounce back and a stronger move with the fact that PCE went down, all that stuff tells me that we're getting mixed readings on the economy still.
So we're getting mixed readings on the economy. Does that account for why this has been a 10-year yield that's barely moved, George? I mean, it's been trading in such a tight range. And if anything, it has been falling, despite the fact you have some serious curve steepening going on in the front and the longer end. So what do you do with the 10-year yields right now?
Look, I think it's literally been, I think you're spot on. It's been a range trading environment. We've had a 4%, 450, We haven't gotten down to 4% yet, but I think we will once the Fed starts cutting. The 4 to 450 has been the range, and as long as we don't get a change or a kind of acceleration in activity, then there's no reason to go above 450. And conversely, to get under 4%, you really need the Fed to cut more than once.
At the same time, though, as I was saying, it is a curve that's been steepening. It's been a 30-year yield that's creeping higher towards 5%. What is in the price? Because it's everything from concerns around Fed independence to what's happening internationally with bond yields going higher everywhere, to deficits, to inflation concerns. What is the driving force of this long end?
No, I think that is a great point. The point around the linkages to overseas markets, I think, is sometimes overlooked, especially by U.S. investors. But in general, like there was this, decade-long search for yield, capital into U.S. fixed income markets, and now they have a viable alternative, within their own home markets in Europe, in Japan, especially. I mean, higher yields elsewhere is making the U.S. have to fight to kind of keep its market share.
What does higher yields, though, globally say about this moment that we're in, George, where so many different governments and countries are having diminished fiscal headroom? You look at what's happening in France, a government potentially collapsing again over trying to bring the deficit in. Japan also having decade highs on their 30-year yield, setting new records. What does it mean for this time when deficits are raising everywhere that long-term debt is trading at such high yields?
Look, the real cost of capital for sovereigns are being challenged because of the fiscal debt sustainability concern. I think that's a valid concern. It's not going to go anytime away, and it's going to be something that bond investors are going to command a premium. And that's why even if the Fed cuts or we get these divergent central bank policy actions, long-term rates will probably stay higher for longer.
That really brings into the fore the question of fiscal dominance. If we are going to get into a situation where central banks are forced to ease policy because of higher debt levels, George, to what degree will that be a dominating narrative, maybe for the second half of this year, maybe for 2026?
I think yes. I think you're onto something. It's definitely going to be a big topic. It's starting to come into the zeitgeist between now and next year. We'll see. I mean, on the one hand, the U.S. is at least benefiting in terms of tariff revenue, and if we don't go and spend that tariff revenue, that should allow us to at least curtail some of the deficit a little bit here. We have the potential for a government shutdown in October around the budgets. So I don't think we're going to have runaway deficits at this point, but just in general, the fiscal dominance, I think, is going to really be a big topic. But for me, those 3 cuts that the Fed is going to deliver are going to be based purely on macro fundamentals. The cuts that happen in 2026 could be driven more around fiscal dominance.
Does that mean if we're getting cuts in 2025 driven, George, on macro fundamentals, that the risk of a long end that moves higher as the Fed cuts, is that diminished if it's on macro fundamentals, or could we still find ourselves in that environment?
Yeah, look, it could be counterproductive. We saw an element of that last year. This is why I keep coming back at the start of the deja vu. The Fed cut 100 basis points last year, and long-term rates rose 100 basis points, right? And look, and the markets have a tendency to price things in before the actual event. So we could argue that a good amount of cuts are already embedded across the whole yield curve, not just the short end. And so I do think that there is that risk. The difference being, though, is going to be a timing issue. Like the labor markets, what Chris Waller mentioned around, like, you can't wait and see to let the labor market get weaker. There is a nonlinearity aspect to the jobs data. If it gets worse, it usually gets worse really fast. And you can maybe see some sort of cleaning house into Q1 of next year, and then the economy gets softer. Conversely, the big, beautiful bill and some of the sort of pro-business measures should kick in at some point in 2026 as well. And so I think that kind of tug of war between, is how much weakness do we truly have? How sustainable is the weakness relative to we're spending a lot of money, and it's going to, also tax breaks are going to help out businesses in 2026.
George, it's such a good point. There's so many cross currents for this market, for this economy to deal with. But if we are in that environment where yields continue to move higher as the Fed wants to ease, not even because of fiscal dominance, but just because of how counterproductive that would be, to your point. And this is a White House that wants mortgage rates lower. Could you see a Fed that starts to do things to try to control the curve, be it something that looks like yield curve control, or we go back to the great financial crisis where QE comes in and there's balance sheet adjustments around things like longer term debt, like MBS, to attempt to bring a long end of the curve down?
Look, I mean, we might be getting ahead of ourselves a little bit, but I do think the Fed has a lot of tools at its disposal. The administration knows that as well. In general, policymakers know what options they have if things were to get worse. I don't think we're at that stage yet. I do think that, Chris Waller has been a big proponent of adjusting the balance sheet, tweaking it in terms of where they allocate their bond allocations. So maybe they buy more short-term bonds. They kind of tweak things a little bit to try to anchor the very front end and force investors to look for yield out the curve. There's things that can be done before you go to the heavy hand of QE and YCC.
Yeah, fair enough. Hey, well, we'll just repeat the title of Governor Waller's speech. Let's get on with it. So September, here we come. George, thank you very much for joining this morning. Wonderful to see you. George Goncalves of MUFG. Now, coming up, the Trump-Cook fight intensifies. An emergency hearing is set for this morning after she files a lawsuit against the president. We'll have your preview for that coming up next on your Bloomberg Brief.
Filed a lawsuit today, and Mr. Pulte has deferred those allegations over to the Department of Justice to investigate them. What I will say is that you had these mortgage receipts very clearly shown to the president, and he has the cause that he needs to fire this individual. He laid it out in the letter that he provided to her and to the public as well. And so we'll continue to fight this battle.
White House Press Secretary Caroline Leavitt speaking about President Trump's move to fire Fed Governor Lisa Cook. A federal judge is expected to hear today the president's decision. It's an emergency hearing, even as Cook seeks to block it with a lawsuit. Joining us from Washington is Bloomberg's Kasia Klimanshinska. So, Kasia, we have a hearing that kicks off at 10 a.m. Eastern. What are we expecting from it?
Good morning. Indeed, this is a historic, unprecedented fight between the White House and the Federal Reserve. And today it will land in front of a judge. This is a Biden-appointed judge that will decide whether Lisa Cook gets a restraining order allowing her to continue to work and appear at the Federal Reserve, especially later in September when the Fed meets to decide the level of interest rates. As you have mentioned, the White House is seeking to fire Cook, pointing to those inconsistencies, let's say, in her mortgage applications where she appears to be claiming two properties as her primary residence.
So we'll see how that unfolds, whether Cook is let in the building for that September decision. There's a question as to whether Stephen Myron will be let into the building and make it on time for the September decision, too. Kasia, the confirmation hearing getting closer next week. What are we expecting from it and Myron's ability to get into the Eccles building sooner rather than later?
Yes, so next week, September, Congress will be back here in D.C. for their session, and Stephen Myron will have a confirmation hearing on Thursday. He is very likely to be confirmed first by the panel and then on the Senate's floor, which will allow him to join the FOMC in the middle of the month to vote on interest rates. Even as Democrats are opposing this nomination, they are quietly admitting that there is very little they can do. They will probably try to stall, and they can delay, but only for a couple of days. So the administration is expecting to have Myron at the FOMC meeting in September.
Kasia, just to wrap things up, there was a really interesting story from the FT today about the Intel stake and about what Washington, D.C., what their skin in the game, why they did it, and why they invested it. The CFO speaking at a conference. What did we learn?
Great question. Indeed, another very controversial move from the Trump administration to claim a 10% stake in Intel. There are questions about this transaction. The transaction is still in works, and the FT is reporting today that part of the move is aimed to stop Intel from selling its manufacturing facilities. In other words, the Trump administration is trying to keep those jobs in the U.S., perhaps also for security reasons, to make sure that some of those semiconductors are indeed made here in the U.S.
Kasia, thank you very much for that roundup of the going-ons in Washington, D.C. Again, that court hearing taking place at 10 a.m. this morning. Bloomberg's Kasia Klimanshinska, thank you so much. Now, elsewhere in Washington, the U.S. has officially begun implementing new tariffs on small packages from around the world, ending a loophole that has allowed for billions of dollars of goods to enter the country duty-free. Joining us now is Bloomberg's Roz Matheson. So, Roz, the end of the de minimis exemption starts today. Just how much of a headache and friction does this now introduce into the trade system for the United States?
Well, obviously, given all the trade stuff that we're seeing from this administration around reciprocal tariffs, sectoral tariffs, and now small packages, it is inevitably causing a lot of confusion. You can see that with countries saying we need to stop some of these small parcels going until we can figure out just how it's going to work in terms of all the paperwork and the spreadsheet of different kind of fees that may apply depending on where you're sending it from, what's in the package, and so on. So a lot of initial confusion you can expect there. But it's interesting to see that this clampdown in a way has bipartisan support. It's something even the Biden administration did look at trying to clamp down on, because the sense is that a lot of big companies could ship a lot of stuff, you know, under $800 and not be on the hook for any kind of fees for it. And so there is that support, the idea this could provide a revenue spinner for the government. And so you see perhaps the EU, the UK, others looking at this also and wondering whether they can also get some revenue out of it. But as you say, the impact could be significant, because you can see already parcels from places like China slowing down, businesses being impacted, and not just the big players. There's a lot of small businesses that send these parcels into the US as part of their revenue, and will they take a big hit as a result? So it could have all kinds of consequences for the US economy and for trade. But initially, it's going to be quite disruptive, to say the least.
Well, Roz, with all things trade, there is still this lingering question over to what other countries will do. And for the most part, they haven't been retaliating. It seems like that may not be the case when it comes to Brazil. What is happening there?
Well, that's right. So Brazil has authorised the start of a process to think about potential retaliation. So this is just the first step, and it's a long road. So 30 days for this panel to look at options, maybe then to refer that to some ministers to think about further options, and does that include retaliation of a sort? So this is in no way suggesting that Brazil's gearing up to retaliate. They're giving themselves the option, and they're talking still about wanting to negotiate. Can we negotiate some understandings here? But starting on that road tentatively, at least, to think about some kind of response, and would that include reciprocal action against the US?
Hey, Roz, really appreciate that roundup this morning. Thank you so much. That is Bloomberg's Roz Matheson. Now, coming up, a host of data and a hearing on deck. We're going to have your trading diary for you next. This is Bloomberg. Let's get you set up for your trading day on this Friday. First up, PCE and personal income and spending data. That comes out at 8:30 a.m. Eastern, followed by UMISH. That sentiment survey comes out at 10 a.m. Also at 10 a.m., an emergency hearing on Fed Governor Lisa Cook at a federal court in Washington, D.C. Now, some earnings that are moving stocks this morning. Dell, that is down even after beat and a raise, but it had tighter margins on AI servers, down 6%. Marvel Technologies plunges 14%. Also down as data center revenue missed expectations. Meanwhile, Petco, the best ticker of all time, woof, up 15.5%. It raised its earnings forecast. All right, as we head to the end of the hour, a quick check on your bond market, because we are lower. It continues to be curve steepening this morning, down by 2.5 basis points. All right, that is it for me on Bloomberg Brief. Surveillance will take things from here. You're watching Bloomberg TV.